Hey, gang, this is Carl White. I am your host today for this next episode of the Scotsman's Guide podcast, where we showcase the authors that bring you strategies and techniques to help you close more loans. So the purpose of the podcast here is to help our loan officers out. And we've got we had a great article that I just finished reading myself here in the June edition of the Scotsman's Guide. And it was written by Rob Chrane, who we're interviewing here today. And he's the founder of the down payment resource. The article you wrote, Rob, was clear up the confusion on these offerings. And it was down payment assistance programs can make homeownership a reality for many borrowers. And I'm inserting this, thus benefiting them and the loan officer. So good to see you here, Rob. Thanks for, number one, thanks for writing a killer article. And thanks for being here so we can showcase you today.
My pleasure, Carl. It's great to be with you. It's an honor to be with you, and I appreciate this opportunity.
Well,
and
cool.
My favorite topic to talk about.
Well, awesome.
Attainable home ownership.
Well, you know, I was amazed in your article. You talked about the interest in down payment assistance programs was shocking to me that you said, I think it was in, just last year, Zillow had 1 million uniques, right? This wasn't one person doing 20 of them, had right. 1 million uniques filling out a form asking about down payment assistance programs. So there is definitely a need for this. I can see.
Absolutely. And, you like just nailed it. You zeroed right in on what we've known this for a while, but this partnership with Zillow has just, amplified it or validated it by an order of magnitude because of the sheer numbers. And the interesting thing is, and I came from the industry. I was a mortgage banker for 20 years. Before that, I was a realtor and a managing broker. So I won't tell you how many years of that, because then you could add two and two and figure out just how old I really am. But if it doesn't show on the screen, but anyway, consumers don't know these programs exist. I mean, I don't know, it's 8 out of 10, 9 out of 10 people you ask on the street, they're like, what? What do you mean down payment assistance? But everybody starts their home search online today, whether it's Zillow, Realtor.com, Redfin, and some of the other sites, and of course the MLS sites, the realtor sites. So back when we launched in 2008, it was 2008, not too many months after we launched. Our primary market, which was lenders and the GSEs, was otherwise preoccupied after the meltdown, the mortgage meltdown. So we had to do what every startup does, and we had to pivot, and we went to our secondary market, which is with the real estate point of sale, using that logic. Hey, if people are starting their home search online, but they don't know these programs, let's flag for sale listings, because we can take the property data and determine a home's eligibility for these programs. The household still has to qualify, but the home does too. So it's just kind of coming at it from a different direction and be able to say, well, people are browsing online. If a home's eligible, there's some programs, tell them that. Say down payment money is available. See if you're eligible.
I think there might be a perception by many loan officers, and frankly, I was one of those until I read your great article in the June edition, is that, I live in a little bit of an affluent county, so my county or my area doesn't have down payment assistance programs. What would you say to that?
I would say you better check before, and don't make too many assumptions. These programs, most of them do have maximum household sales price, but they adjust based on how high a cost area it is. So I was talking with a loan officer in Orange County, California, a couple of months ago. He said, well, nobody buying here is going to get down payment assistance. I said, well, give me an address of a property, or maybe a property you just did a loan on or whatever. And, I'm sure this was inexpensive for Orange County, but it was over $800,000. And there were 6, 8, 10 programs available for that home. So, it's surprising. And another way I would answer that is that on average, with our multiple listing service integrations, we find that on average across all different markets that we cover, about 78% of the active residential listings are eligible. So in Houston, Texas, it's 89%.
That's amazing.
Orlando, Florida, yeah, it's 78% or something.
I would have never have thought that. Like, brother, I've been in this business, about 25 years now. Have me or my team has closed literally over 10,000 loans. I would have never have guessed that. That is just an unbelievable number. I saw something else that what was I hate to keep using the same word, shocking. I need to get my thesaurus out, but it blew my mind. Where you said that 1/3 of all declines could have closed with a down payment assistance program, and that they could have received on average a $17,000 assistance. So 1/3 of declines, if they had a down payment assistance program, a third, right? That's a big number. I think of every time somebody's declined, all the people that's angry. If I could have a third less angry people, and us be the champion now that we're coming up with a solution when the last 3 loan officers also declined it. That's a remarkable number. Where are most loan officers going wrong on this then? Like, is it just lack of knowledge?
I'd say it's a lack of knowledge, and I'd say it's and again, coming from the industry, I had the same fears and trepidation about these programs. They're intimidating. We've got 2,300 programs in our database. Now, no lender tries to do all of them.
Wait. Say that again.
2,300 programs. Now, 75% of those are some type of down payment assistance. So that's still a lot of DPA programs across the country.
That's a huge number.
Yeah, and which is great. It's great on one hand because it's like, wow, lots of opportunity, lots of money. But man, where do you start? How do you keep up? Because these 2,300 programs are distributed by a little over 1,200 different providers.
Where do you start?
Well, I'm trying to avoid putting in a shameless pitch, but
brother, let me tell you something, man. If I'm out there with a spoon trying to dig a hole, and you know where there's a backhoe, dude, tell me where the backhoe is.
Yeah, well, we developed a backhoe, and it's because I was not a tech entrepreneur. I don't have a technology background, but I was in the business, and I said, there's got to be a better way. This is too confusing because even though at least back in the day when I was originating, it was pretty local business, but in any metropolitan area, you can have dozens of programs available, and they have different rules. They have different, the funding comes and goes, and so I just kept saying there has to be a better way. And then once the internet became the place to go for any kind of information, but especially real estate related, I thought, well, there's the place, there's a way to raise awareness and automate the process of matching a borrower, a property, with whatever programs are out there. And that's in essence what we do.
That's what you do over, and that's downpaymentresource.com, I take it.
Yeah, we have the public facing site where we're primarily a B2B enterprise sales business model, but we do have a widget available on our site for anybody. We know professionals use it, realtors, loan officers, consumers use it. But then in our enterprise sales, we have products that we license specifically to lenders, that we license to multiple listing services, that we license to Zillow, Realtor.com, Redfin, and so on. So our most users are not coming through our site. They may be using our platform, but they're using they're accessing our platform through a lender's site.
Got it. I got it. So this is something I would put on my site as a lender. So, hey, well, let me ask you this. Rob, and so I'm using air quotes here. Rob, these are I hear about these down payment assistance programs. They're too complicated. They extend closing times. What do you say with that?
Yeah, we love to flip the script on these myths and misperceptions. We find that for the most part, they do not add time to the approval and closing cycle. It's not to say it's never happened, but they typically don't. And we've done different kinds of research to determine that. Plus, anecdotally, they are, it is intimidating. And one of the things we tell lenders, especially, whether it's loan officers or lending institutions, if you're just getting into this space, you don't have to boil the ocean. Don't try to do 2,200 programs. Don't try to do 200 programs or 50 programs. Start with 5 programs, and you can even find the ones that are a little bit easier to do in terms of lender participation requirements, and just get started. And just start doing them. That'll get you over the fear and intimidation. It's like anything else. It's like back when I was originating loans, I didn't do a lot of FHA or VA loans. So when an opportunity came up, felt a little awkward because I didn't do it every day, and I had to I had to refresh on it. And this is sort of the same idea.
Yeah. And in that same vein, I think another, and I'm going to use air quotes again. Yeah, I get it, Rob. All right. So maybe it's not too complicated, and maybe it doesn't extend closing times. I'd never actually known it to do that. I've never actually done one, but I've just heard that. And I've also heard so we busted that myth. What about realtors? Do they want these kinds of offers? Like, how does that work with that?
Yeah, I'm so glad you asked that. Certainly a couple of years ago, and in some cases, if you've got a tight market where there's competitive bidding, multiple offers, the realtor or the listing agent is going to advise the seller, take the all cash offer. It's cleaner, faster, quicker. Sometimes there's no way around that. But in a couple of years ago, where it seemed like every property had all cash buyers lined up around the blocks, consumers, even VA borrowers were discouraged, let alone down payment assistance programs. But I'll tell you, and again, because we work with MLSs, therefore we're training realtors all the time. The number one question we get, and we get it at least once a day, is from realtors: tell me loan officers in my market that can do these programs. And we even started just to create sort of a community around this, we started a Facebook group called Down Payment Insiders. So it's not our Facebook page, but it is we set up the group. And if you go there on Facebook and you scroll through all the posts from agents, it feels like every time I look, every second, third, fourth post is, "Hi, I'm Paul from Orlando. Glad to join this group. I need loan officers who do DPA in my market." Or "I'm Sally in Houston," or I'm, whoever. And so now loan officers have started chiming in and say, "Hey, I'm here and I have some good programs." No lender can offer every program out there, and you don't have to. There's enough programs. Again, start with those 3, 4, 5 that would cover a lot of the market. And get comfortable with it, and then build up your capacity and your competency.
So you talked a few minutes, man. Good stuff, by the way. This is really good stuff.
Thank you.
So you talked about, hey, well, come to find out, the home prices. This is not just for the lowest of the low prices of homes in the area. Let's talk a little bit about the incomes for my borrowers. Like, is there an issue if I've got a borrower that makes, I don't know, let's just say average income? Like, I always thought the cutoffs on these were like, I got to be, in essence, and I mean no disrespect by this, but like the working poor, right? I mean, it's an element of the society, right? It's just where we are. I grew up as a working poor with my family as a child. So what about if most of my clientele are let's say, and again, I'm using air quotes here, average, whatever that is this going to be a benefit to me?
It certainly could be. And I'll give you an example. I was just actually on a webinar this morning with one of our MLS partners in San Antonio, Texas. And they had a question like, are there programs that have income limits above 80% of AMI? Because that's kind of what I heard you saying.
Yeah.
You didn't say it that way, but that's kind of the way that used to be sort of the typical income limit, 80% of AMI, maybe to just slightly for bigger households or whatever. But San Antonio is not like pretty much every other market we've seen. The majority of programs there, the household income limits exceed 80%. a lot of them are 100, 120, sometimes up to 140% of the AMI. Again, in that market, just because those numbers are fresh on my mind, I think one program goes up to maybe 139,000 annual household income. So again, just like the impression people get when they think about properties, people think, oh, it's just, low cost properties, maybe in targeted census tracts or distressed neighborhoods. No, it's a lot of properties, and the same thing with the household income. So, the household income limits adjust according to the area median income. So if it's a higher cost area with a higher area median income, the household income limits will be higher. But lots of flexibility across all the different programs out there.
Very interesting. And what impact, if any, does the DPA and DPA down payment assistance program? What impact does the DPA have on like loan to value or debt to income ratios? Is there any effect on that? And if so, like in a general sense, and I get it with all the different programs, but just give us a general view of that.
Sure. Well, in these you mentioned the research we've done, the 33% or the possibility or the potential to increase your pull-through rate by 33% by applying available DPA. Another byproduct of that research was that on average, that DPA, when applied, on average will bring down the LTV by about 6%.
Got it.
So that helps with DTI a lot. It lowers the P&I, may lower the PMI or negate the need for PMI. So you're not only helping people who don't have enough cash to get in, they have the income and debt ratios, they have the FICO scores, they don't have the cash, but also if they're borderline or just over the edge in terms of DTI, that can make a difference. And that's not even getting into the whole topic of programs that can be layered. When you talk to real experts, you hear stories about people layering 2, 3, 4 programs. We heard a realtor in Seattle a few years ago. Her record number of programs layered was 6 DPA programs on one transaction. Now, I don't want to give the wrong impression. That's an outlier. Okay.
I never knew you could do more than one. That's amazing.
Yeah. I mean, it's just, it is amazing. It still amazes me. And I've been dealing with this for 15 years.
Yeah. What about, are there, I know here in, so I live in Florida, here in the Clearwater Beach, Tampa Bay area. And brother, we have everything from high multi-million-dollar homes to, about 10 miles up from here, we've got a large mobile home community, primarily retired, but all kinds of different things. Are there DPA programs available for specific types of homes, like manufactured homes or multi-unit properties kind of thing?
Yeah, glad you brought that up. There are. That's one of the things we track in our database of all these programs is what are the allowable property types. And there are programs that allow for manufactured housing. Now there's certain, not unrealistic or not unreasonable, but manufactured housing has to meet certain codes, certain standards, but again, nothing unreasonable. So, and I want to say maybe 40% or more of the programs in our database do allow for manufactured. Depends on the market because it's market by market, but there's certainly opportunities there. And I'm especially glad that you brought up multifamily because this is something a lot of people don't think about. And it's not available everywhere, but it is in a lot of markets. 2 to 4 unit owner occupied, as long as one of the units is going to be occupied, there are some DPA programs for 2 to 4 unit properties. So when you're talking about building wealth, building generational wealth, getting started on the home ownership ladder and building equity, man, if you're starting out in life and maybe you're even still single, if you could use DPA and buy a duplex, triplex, quadruplex, what an investment.
Yeah. How can loan officers use DPA programs to like expand their client base and attract new clients?
Yeah, I think as I mentioned, the realtors are looking for loan officers, and it's a differentiator. I think a lot of times there's just fear factor, fear of the unknown, this intimidation of getting into something complicated that's going to slow me down or whatever.
Yeah.
But what a differentiator to walk up to a realtor, walk into a realtor's office and say, we've got some programs that can help you maybe sell a few extra homes every year. Yeah, can I tell you about them?
Yeah.
That's better than bringing rate sheets and donuts.
Yeah. I like donuts. So let's not, everybody bashes the donuts.
All
Let's
right,
not be bashing.
bring donuts and DPA.
Yeah. There you go. There you go. There you go. Yeah. I like that. Helping them build their business by, dude, I cannot get over that number of, a third of all the declines may have been salvaged by a DPA program. I mean, that's that might also be another opening pitch is, hey, did you have anybody declined here in the last 90 days? And if they're an active agent, of course they have, right? I'm a branch manager. We've had multiple declines in the last 90 days, right? And if I could show you a way that perhaps can't make an income claim, but perhaps a third of those we could have salvaged by little known programs. If I could show you that, would you give me 20 minutes to show you how? Who's going to say no to that? Right? That's a great value add. So, hey, as I see we're coming up on the top of the hour here, Rob. So tell us again, how can loan officers educate themselves about DPA programs and what's available in their specific markets?
Yeah, well, one way, of course, is they can come to our site, downpaymentresource.com, and just they can do searches. It doesn't cost them anything. They can put in, and they don't have to have a specific property address. If they have a specific property address, fine, put that in and see what's available for that home at that price. But you can also do a generic search. So that, put in a city, a county, even certain neighborhoods will pop up. So that's one way. And then we have a lot of content. On-demand recorded webinars. There's all kinds of stuff in there on our site that people can grab for free. But if you didn't go to our site or didn't know about our site, just do a search, do a Google search in your area and say, down payment assistance near me or housing finance agencies near me. Look up your state. Every state, in fact, some states have more than one, but every state has at least one housing finance agency. And they're they have a lot of programs. Then, of course, you've got the municipalities. They all have programs. The programs through the municipalities and nonprofits tend to be, the traditional community seconds. And those are pretty easy to do. You don't have as many, hurdles to overcome as you do to get into a state housing finance agency. So, you can start just by researching the providers and again, do Google searches and things like that. And look for those organizations are always doing training. So, they rely on lenders and realtors to help bring people to use their programs. So they're happy to partner with you and train you, and some of them even will, I know some that give out referrals once they have certain loan officers that do a lot of their programs, they start getting referrals from that agency. So
yeah,
that's where I would start.
Good stuff. Rob, thanks you so much. We really appreciate you being here. And for our listeners, thank you for tuning in to our podcast here. My name's Carl White. Honored to be your host here today. And we also appreciate any suggestions you might have on future episodes. We're always looking for that too. So, and do me one last favor. Would you be kind enough to share this link to 3 of your favorite loan officer friends? They'll thank you for it. I'll thank you for it. And the team over at the Scotsman's Guide, thank you for it too. Send it to 3 of your friends, of your loan officer friends. So we appreciate you, and we'll see you on the next episode.